Good afternoon and welcome to the Market Close Report for Friday the 30th of January. Well, the final day of the week and month and the Aussie market's losing streak has remained alive. Unfortunately, the ASX 200 falling by 58 points or 0.65% to 8,865. Now, over the week, the market did manage to push slightly higher by about 0.1%, so not much movement at all on balance, but that certainly does not tell the full story. A lot happened this week. On Tuesday, when we came back from the long weekend, we had the Aussie market having its best day in 5 weeks. We hit a 3-month high. We approached the record high. We got about 2% away. On Wednesday, things changed a bit when we had hotter than expected inflation data that actually flowed through to the market. And that basically, if nothing else, has just locked in the market's expectations for an interest rate hike next week on Tuesday when the Reserve Bank meets for the first time this year. So market pricing in around a 70% chance it will get the first rate hike since November 2023. We've also had gold this week going from strength to strength, basically cracking $5,500 per ounce for the first time ever. So a tremendous run there. Interest rates in the US were kept on hold first thing Thursday morning. And then we also had a bunch of US mega cap stocks releasing their results. One of the big movers was Microsoft, which actually fell by 10% last night when it basically fell short of what the market was hoping for. Now, over the month, the market had a much more impressive performance, lifting about 1.8% here in Australia. The best performers ended up being uranium miners like Deep Yellow and also Paladin. And in fact, an interesting stat is that almost all the 10 best performing stocks on our market were all in that resource space. Things were a bit more diverse though. In the losers column, we had a few tech stocks, a retailer or two, a payment company, and a miner making that list. Now, if we look at the sectors today, we've got the tech stocks that fell most, falling about 1.9%, but also the miners actually did much worse than that, falling by 3.4%. So a pretty big decline there. We've got to remember that the materials actually hit a record high just yesterday and have improved by roughly 9% just this week. And this has had a lot to do with gold prices going from strength to strength. We've had also a couple of other losers today. Consumer discretionary, industrials, utilities down, but not by much. In the winners column, we had healthcare, which was one of the worst performers last year, roaring back today, lifting about 1%. And also we had some improvements coming through from the financials, which is always helpful. As far as the losers are concerned, the winners rather, we had ResMed, one of the standouts, lifting about 3.1%. Now, it had some solid demand for sleep apnea masks that it sells, and that's the reason why over the past quarter, both revenues and profits have done well. The strongest growth actually coming through in the Americas, the US, Canada, and Latin America all having strong gains. IDP Education, which is one of the world's largest English proficiency testers, lifting almost 6%. Now, the stocks had a solid January, but a terrible few years. So a reminder that it did halve in value in 2025. Nine Entertainment, 5% higher today. It's basically sold its radio stations, which include 2GB and 3AW. It's moving away from radio and regional television, instead moving towards digital advertising. So it spent about $850 million to buy an outdoor advertising outfit called QMS Media. And AMP, 3% higher today after receiving a broker upgrade. Now, there were plenty of losers on the market, most of these actually in that mining sector, in particular those gold miners. So Genesis Minerals down in the order of around 10%. We had Capricorn Metals down almost 8%, and also a bunch of others doing quite poorly, like Perseus, which was down around 8% as well. Now, the interesting thing about gold prices, which have dropped back about 3% last night, and one of the reasons perhaps for that was Trump. So President Trump supposedly is favoring a pick for a Fed chair who is considered to not be as keen on interest rate cuts as some of the other favorites. So basically lower interest rates, or the expectation of lower rates in the US, has been one of the things that have been helping gold prices move higher. So that was perhaps one reason. A BHP also coming under pressure today, down 1.8%, but we've got to remember it's been on a tear as well, about 10% higher just this month. And lithium miners like Liontown doing quite poorly, falling about 9.5%, and this was after handing down a quarterly update. Now, if we look forward from here, there'll be a few bits and pieces out later on this evening. Companies like Verizon, Exxon, Chevron, Colgate-Palmolive will all be out with their earnings. Next week will be even busier. There is going to be a lot on the cards, basically, that could move markets. Now, I've already mentioned the Reserve Bank, which is likely to lift interest rates next Tuesday, but we also get some profit results continuing over in the United States from stocks like Amazon and Alphabet, so more of those mega cap stocks. We also have profit reporting season kicking off slowly, as it usually does here in Australia. We'll get to that more next week. As far as currencies go, we've got the Aussie dollar sitting at around 69.9 US cents. It did weaken a touch as well against the euro and the Japanese yen. On that note, everyone, hope you had a great week. Enjoy the weekend. We look forward to seeing you next week.